Hello?
Hello? Hello? Hello? Hello?
Good afternoon, sir.
Good afternoon, Chairman.
So you can start.
Okay. Thank you very much. Thank you very much, everybody. My name is Lanre Ajogbasile. I'm a senior program manager with the Nigerian Governors Forum. A little bit about myself, background, financial economics, and also been supporting tax policy and institutional strengthening for quite some years. Chairman, when you make me present after Mr. Tolu, you've more or less set me up. Uh, but I would also borrow from his very wonderful background he has put on foundation. I also just want to recognize all members of management present and also some of our other chairmen, which I think I recognize. Undo is also there, and also some representative from Kaduna. Thank you very much. Without wasting much time, because I know everyone has been seated for quite some time, just to give us some picture, right? And why are we so bothered to even, they say if it's not broken, why fix it, right? That's typically the story. But even for a national picture, we've been trying to see, okay, how can we grow our revenues? How can Nigeria get to a point whereby we're dependent on our internally generated revenue as against the tradition of running budget deficit based on domestic or external borrowings? Or fact taking a larger share of and this still remains a wish that we all try to pursue, but bringing it down to state level. And I know again recognize that things might have also changed, and I won't be surprised in Ekiti in terms of your 2025 data. So this particular slide I'm showing is just based on up to your 2024. But seeing the growth trajectory, as you can see with the trend line on the left, you can see that the projection, rather the direction of projection, points to a growth. However, what is important, I want to bring out of the slide on the left or the graph on the left, is that the growth is beginning to peak, and it's not unusual. If you look at IGR data today, you'll see some states that, I mean, yes, their total nominal tax revenue is low, but when you look at it in terms of growth rate, it seems high because somebody jumping from 10 million to 10 billion and somebody jumping from 10 billion to 12 billion, the growth rate of jumping from 1 billion to 10 billion is higher. But if you look at it in terms of the nominal value, right, of what they've both generated, the other state that did 11 to 12 is yielding more revenue. However, in between, beneath that storyline is that the growth rate, that is the marginal increase in tax revenues, was peaking. And so if you look at the compound annual growth rate, and what's compound annual growth rate, since we're talking about data analysis, is rather than doing annual year on year, when you do compound annual growth rate, it isolates or normalizes volatilities between the years. So when you pick from 2019 to 2024, because there are spikes in between, it's difficult to use annual year on year to analyze. So when you use compound annual growth rate, it helps you to normalize that volatility. And what we'll see is that within that 6 year period between 2019 and 2024, Ekiti recorded about 15% in annual average growth rate using compound annual growth rate. But then, if you look at the annual growth rate for 2023 to 2024, it was 10%. So that tells you that the marginal change or marginal improvement, and it's also because you need to keep innovating. The boom that happened between, if you look at it, it went down in 2020, and I will start seeing a sharp rise again. And one of the things that happened in 2020, we all remember, was COVID, right? And because it was quite difficult for a lot of revenue services to handle contact-based taxes, that is, typically go to market and how we do things, the boom of leveraging technology also took place. It's also like if you go back in 2017, 18, thereabout, one of the things that was tracked as an enabler for that growth at the time was the shift across IRSs and generally in the country's public finance system of moving from cash transactions towards cashless, so blocking leakages. So there's always a story behind every data, and that is very, very important. So what am I saying is that except we begin to think of what are we changing, the growth rate or the marginal increase that we achieve year on year will begin to dip. Lagos, for example, Lagos, I guess the highest IGR, but their growth rate cannot be as much as you probably see with some of the states that are coming from far behind. So that is the story that I also want to see. Another thing that I saw in this data on the left is a positive correlation between tax revenues and MD revenues, suggesting a systems impact. So what that tells me is whatever, and these are the kind of stories that I want you to begin to pick your minds, that what that means we're doing something right, and what are we doing, and thinking back at how can we scale up that thing that we were doing, because whatever you were doing on the tax revenue side was definitely impacting the MD revenues, because there was a correlation, a strong positive correlation between both revenues. But also on the right is a story that is important, and it talks about looking beneath the surface. That is a phrase that should always stay with you. When you begin to ask yourself the question, why? Why is this? Why is this growing at 10%? Okay, it is MD revenues. Why is MDA revenues growing? Okay, it is because of the tax offices in, for example, let's say look Surulere and this one, or this LG, or this LJ. Why is that LGA growing? You begin to ask the question, why? That is typically how you should reason when you're doing data analysis. So when you look at the graph on the right, it's telling you a story as well. That is, in that growth that we're even talking about, what is really, really, really driving that growth? What is really, really driving that growth? And you will see that story as well there. What I just also want to mention is if you look at tax to GDP ratio, and MBS released some data around state tax to GDP ratio for 2023. I think they released about 3 years, 2022, 2021, 2022, and 2023. And as you know, GDP is a way of assessing productivity of the economy, right? And at 2023, the GDP of Ekiti, let me just confirm that I'm being heard before I continue so I don't lose the room. Am I being heard, sir? Hello, sir. Hello.
Loud and clear, sir.
Okay, thank you very much. Now, if you look at the tax to GDP, the GDP that was ascribed to Ekiti based on the analysis of MBS, they put it at about 4.6 trillion, right, for 2023. Obviously, there's no 2024, and again, this was just to show some quick analysis. And so, if you do a tax to GDP ratio, taking total IGR revenues, meaning that I'm even taking, okay, MD revenues plus total tax revenue, right? Putting everything together and taking that as a percentage of the state GDP. And that says that tax to GDP ratio is put at about 0.76. That's 1%. And this is not a story that is unique to Ekiti. So this is not about whether Ekiti is not doing enough. It's just showing that there's a potential to pursue, because the numbers of GDP only reflect the productivity of the economy. Yes, you can begin to discount for things like the portions that are collected in terms of CIT, VAT, and some of those, right? So even if you add all of that, then maybe you come to about 4% thereabout or 3%. But we all know that sub-Saharan average is looking at about 15% thereabout, which is what the nation as Nigeria is pursuing. But the story here is just to say that, look, the tax effort remains low despite this wonderful story, and that there's a lot of potential for us to pursue. They say the reward for hard work is more work. Let me move to the next slide. Now, what are some of the considerations to look at, right? Or some of the questions in terms of doing tax administration differently and more effectively. I think the previous speaker has laid a very strong foundation about reacting to the tax laws that have been legislated, and reacting to it in terms of making sure that you are responsive to the changes and you prepare for those changes, ensuring that you are ready. So, how do we think of tax administration differently and more effectively? The first one is Laffer curve, right? Because oftentimes I hear things like, "Oh, our rates are too low." Oh, and then you begin to ask yourself, "Why do you say this rate is low?" And automatically things have increased in Nigeria. That shouldn't be the basis for why you increase tax rates, right? There needs to be some evidence behind everything you do. Why do you want to move from 1,000 to 2,000, right? Have you thought about the affordability for those who will pay it? Because what the Laffer Curve basically is talking about is that while you can increase tax rates to increase revenue, there is what we call an optimal point. Anything beyond that optimal point, you will begin to lose compliance because nobody will pay, because you're taxing, and that's why Style will say, let's not tax poverty, right? So it's very important that you can't on your own come up with what the optimal tax rate would be. You have to do analysis, you have to engage, you have to assess what the affordability is, you have to assess what the economy is saying, you have to assess where your taxpayers are in terms of the income curve and all of that. So I will share this presentation, but some of these animations pretty much tell you a story. But it's important to have at the back of our minds some of these considerations. So the Laffer curve theory is a very important theory that should always be at the back of the mind of a lot of tax officials. It strengthens the message that you need to identify that optimal rate of tax if you know you want to continue to optimize your collection. The other one is Pareto principle. We all have limited resources. You cannot stretch yourself overly thin. And that's something I continue to emphasize on in terms of understanding what your core taxes are. You can have 10 items on your taxes and levies. How many are really generating up to 75% of your total revenue? That should be your focus. That should be your focus. And it will help you optimize your administration. So identify what your core taxes are, right? Identify who your core taxpayers are and ensure you don't lose them. That is really important because one INWI, for example, losing one INWI can have an huge impact than losing maybe four people that for example, are now exiting as a result of the new PIT income scale, income table, right? So you need to really, as you think of this, you need to really also look at what matters the most. You have limited resources, limited manpower, and you need to ensure that you're putting it in the right place. The other consideration is the canon of economy. And this one emphasizes that, look, anything you're doing or any process, the moment it is becoming cumbersome to comply, the cost of compliance is higher for the taxpayer and it's higher for you, then you need to rethink that. So it's important you minimize the cost of compliance and increase the efficiency in administering those core taxes that you have identified from the point of the Pareto principle. So that is very important. Um, I will start with technology, right? Because technology is one of those things that will help us get to where we want to get to in terms of efficiency, in terms of being able to optimize some of these core taxes. Technology is also important. But what are the key barriers we are seeing to mobilization to technology in Nigeria and at state internal revenue services? One is in terms of the taxpayer database. And I still ran a session yesterday, or 2 days ago, for a particular state internal revenue service. And I went into their registration, created a dummy profile, and I actually succeeded in creating a profile. I was assigned a TIN, a TIN, a taxpayer ID, and everything. And I used very fictitious names, fictitious address, and all of that. Now, so the tax authority will assume that, oh, it has gotten an additional. So if they are checking their number of taxpayers as an indices for performance, they will assume that, oh, they've gained one extra taxpayer. Meanwhile, that extra taxpayer is not actionable, is not useful for your growth. So it is very important that you get taxpayer registration right. If it means that every other thing will crumble, no matter technology you deploy, whether IBM, whether Oracle, whether even locally customized solutions. Technology is garbage in, garbage out. If you put the right things inside, it will help you to optimize and achieve the results you want. So one of the challenges that is prevalent is, for example, manual registration, a huge prevalence of manual registration, which does not allow for those validation protocols that you could possibly. I'm not saying that we would completely or possibly could do away with manual registration. No. But what I'm saying is that we need to begin to move the scale, the balance scale towards more of e-registration that allows you to validate some of those things. And even when you do manual, you need to perform a secondary validation. And one way, if you have done it with technology, is to integrate with foundational ID, right? To do this. So if you do it just manually, increases the risk of errors, the risk of duplication, right? The other one is, like I said, manual verification and approval. A system can easily run protocols and verify for you whether Lanre is real Lanre. By the time it checks for example, if you are going at the airport when you scan your passport now, or if you are applying for something and they ask you one question, maybe for example they ask you Nigeria, automatically they ask you country. Automatically, when you get the phone number, you realize that you cannot put maybe, or you cannot put, for example, another local government of another country, right? It's because the protocols have been set in a way that it ensures that you stay within the boundary that maintains the integrity of the information that is being gathered. So this is the importance of using technology for that process. The other challenge that we have seen is that you have standard operating procedures within your IRS, but they are not mapped or integrated with what is showing up on your systems, right? So you might have a workflow process written down, maybe hard copy in a staff manual, operations manual, whatever. But you need to, in choosing technology or developing technology or domesticating technology, you need to overlay your standard operating processes, your workflow, your organogram, all of that throughout the process, whether defining the access protocols, whether defining the functionality, right? And I'll give examples of this. So we've seen IRSs that, for example, you can register only corporate and individual. There's no registration this thing for MDAs, for example, to manage government to government transactions. So when MDAs want to remit payee on behalf of their staff, very federal MDAs in your state. So that's an example. SOP too could be that, for example, before the chairman issues a TCC, the SOP, written SOP, could say, oh, it must have gone through maybe director of something, right? Audit or something must have signed off. And it also says that for director of audit to have signed off, it means that certain documents have been checked. Now, the thing is, if you leave that to a manual process, some of those can be skipped either unconsciously or even consciously, because we've also had incidences of corrupt practices in the IRSs. And it's not unique to IRS, or favoritism or bias or some of those. But because of a workflow process, it ensures that the process maintains integrity till it gets to the chairman. And I wish, I don't know if Mr. Tolu is still around, but this was something that I believe under his administration at the time, because we did do a visit during that time. He had, so from a system, there was a workflow just like you have in the bank. When you raise a transaction and it has to be approved by your manager or assistant manager or something in a queue, that system allows you to maintain integrity. And that's an example of integrating a structured SOP with technology. I've talked about human error, for example, in calculation. I trust that Mr. Tolu also showed, I know he showed you an example of a tax calculator for PIT, which has been deployed by the Presidential Fiscal Policy and Tax Reform Committee. That's an example. Now, there's no, I mean, if people have that, there's going to probably be less error of saying, oh, no, this is how much I'm meant to pay. It leaves some matters to rest, right? And also eases the process of, because tax assumes people will do voluntary compliance, right? So you want to, as much as possible, give them enough tools that helps them to have, to some extent, present a truthful picture, right? Before you then are able to assess and see whether this you're raising additional assessment or not. TCC as well are not automatically generated. We still have a lot of that process because TCC is the point where I, as a taxpayer, feel like, oh, this is my evidence to the public or to any entity that yes, I am fully compliant with my taxes for that year, right? And this is still very much manual in a lot of cases. Yes, we are seeing a new automation in terms of verifying TCC. I know, for example, FCT IRS does that. You can verify your TCC. Anybody can verify your TCC. Once they pick there's a barcode there. So if I was someone, you want to come and take a contract form, and I need you to prove that you're tax compliant, I can just scan that barcode and I can confirm that was issued by FCT IRS. So these are the ways that technology is moving and changing how we do the business of tax administration. Lack of transparency and accountability. I think this is one area a lot of you are doing great in terms of, for example, being able to track inflows that are coming in, and but yes, again, some of these can be improved in terms of being able to break those data that you are seeing beyond the high level data of, oh, I got 10 million from A local government, 5 million from B local government, to moving to nuisance data, like, for example, that data I got from local government A, what is it, the breakdown across the tax types? What is it, the breakdown across the category of taxpayers, right? What is the breakdown across sector? Because immediately tells you, for example, I would assume that in this boom of almost every state is undertaking huge infrastructure development. The construction industry is booming, right? You should be following trends. You should be checking sectorial trends. And technology can be very useful in being able to do this and also help you improve risk. So technology adoption anchored on DPI principles remains a strong enabler for revenue growth. I've talked about how, for example, e-registration integrated with foundational IDs, such as NIN, CAC, supported by multi-factor authentication, face capture, file update functionality, can really improve the integrity of your database. You, for example, imagine that, I mean, not everybody might use your face capture or whatever, but at least if you have such for 20% or even 40% is a start, right? Because you now know that the Lanre on your database is the Lanre on your database because you have his face, right? You know when you see the Lanre, you know this is Lanre. So those are examples. And it's very important because, again, things change, people's lives change, right? So addresses and a number of all these other things. So you are having multiple ways of verifying the actual true existence of these people. So the other things are like BVN, JTB team, and a lot of that. JTB itself will play a very important role as we go into 2026 because it's going to be managing cross IRS team management and maintaining a central database for that. So you won't need to start calling Chairman Lagos to verify, okay, what is maybe this Mr. A's this thing. So you can really just do that through the JTB, and that's the vision. Integration of database with relevant systems, inter and intra MDAs. Where is this becoming important? And I'll use Lagos, and it's not just Lagos, I think Kaduna, a number of them also do it. You cannot go and collect C over and not have paid tax. In short, there's a particular case in point where, for example, my mother-in-law wants to pay for building permits. She didn't work in Lagos. She's always been a federal government worker in Abuja. But I mean, for what is what, she now has economic asset. Going back to what Mr. Tolu was talking about earlier, and she now wants to obtain a building permit. And one of the things the IRS has done there is that you must they've agreed with the land bureau to collect a baseline, a base amount, and then the IRS would then can then review later and decide whether they need to issue like an additional assessment or not. So, but without that integration, there is no way you could have used that. So where the land bureau cannot view the details, they don't need to start writing to the IRS to get information. Imagine you have to write to the IRS for almost 50 people to get a response on whether this person is compliant or whether this person is a registered taxpayer. They should be able to have access to a database whereby they can verify somebody's TIN or verify somebody's at least compliance level. These are the important things that integration can help to do. And you'll see some provisions that are going to support this. In the 2026 Nigerian Tax Administration Act, there are now some provisions that are strengthening the application of some of this, and I'm going to talk about those shortly. Secure customer account. Chairman, I'm sure you've heard me say this over and over again. It's like putting someone in an environment and ensuring that all the transactions of their life is within that environment in terms of as related to tax. That's what a secure customer account is like having a profile. When people log into a profile, the way you log into your Facebook, LinkedIn, or whatever, and then you go in there, and then it's within that environment, you do every of your normal transaction from filing returns to declaration to responding to assessment to responding to you can even upload for some IRS. I believe you can. I've seen one at least. You can upload an employer can upload the payee records within that secure environment. So it's not like it's not happening. There are pieces and bits of that happening in different states. But the important and the potential of that is because it's a secure customer account and it's tied to a person's profile, what you are doing is you are building an history of that person. And what would happen is you get to a point that you can already issue pre-filled returns. Because remember that, I mean, it's not everybody enjoys paying tax. So, or some are just too busy, especially our inways and all of that, or feel too big. So, but imagine you give them a pre-filled returns that is just off, completely off. It makes no sense. But if you give them a pre-filled return that has been based on some kind of averaging or some kind of analysis based on the last maybe 5 years of returns that you have been able to take through the single customer account that you have documented, it is easier. And you're telling them, oh, you can edit. What we have done, we will help you pre-fill so that at least you are not starting from scratch. These are ways again of nudging compliance, right? But this is not possible, and you don't have that intel to be able to do that if all of your transactions are not happening within that system. If they're happening, some are happening manual, some are happening only payment is happening within the because that's what's happening. A lot of what is happening within the single customer account that even exists now is majorly registration and payment, and then some cases TCC application. But returns is completely missing. Then it does not allow for bidirectional communication. You should be able to communicate with me securely within that environment. So these are some of the things you want to pursue and imagine, and has a lot of impact on eventually on even your data intelligence. The other one is your workflow management and risk-based profiling supported by Business Rules Engine. And I think I talked about this slightly before. It's about working from your SOP and making your SOP work for you. Technology should not be built off the cuff. When your developer is coming and blowing all sort of English to you, the first thing you should do is ensure that the business requirement that you are submitting to, so developers should not do the business requirement for you. You should inform the business requirement that's going to guide that IT development or that system development. You should be the one driving that the functional requirement, because it is what you do, and that's why there's always a mismatch oftentimes between what developer eventually delivers to you and what you really want and is useful for you. Today there are a lot of systems, technology systems that are redundant, and entities are paying so much and they're not using it because it's not useful, because by design it was a failure. So even as you adjust your system, you need to go back to it. The business requirement for this thing. What is business requirement for this thing? Business requirement talks about what is our work process, our work program. How do we do this functionality? So we take filing. It's not just a fancy name of e-filing. Your manual filing, your physical filing, your filing process should be reflected in the workflow design for that module on e-filing for this. And then you can introduce business rules engine, for example, whereby even with your workflow, like I gave an example, before a file can go to the chairman, for example, for TCC approval or for certain things, or you will need to explain. If I remember, there was cases where I've been in organizations where the system, if you are meant to treat something, there's a protocol that you as a person, if a file is moved to you to treat or approve, you must do it within 48 hours. The moment it's more than 48 hours, you cannot click approve. It will require that you must put an explanation, summary explanation for the manager on why you did not do it within 48 hours. So it introduces accountability. So that's about, and then, like I said, risk-based profiling is that if you've gotten your secure customer accounts right, you have so much information to be able to do risk-based profiling, know who you are nudging. Someone that has not been compliant for 10 years or 15 years and has been in your database, it's not today will become compliant. That is the truth. And then if you've also been able to look at records or been able to access, you'll also be able to triage which taxpayers are what certain compliance strategies, because different compliance strategies cost different amounts. Um, Ensure compliance through payment solutions like USSD. I mean, that is looking at your Stat 234, and you can do this with operators. And this is not really for big taxpayers. We're talking about things like, for example, daily ticketing, right? Things that where people are paying 200 naira, 100 naira, that they can just pay with their from their phone credit or something, right? Or they can load a wallet and then they can do it. You can also leverage mobile agent banking for that. You can develop a mobile app. I know at some point Lagos was trying to do a mobile app for the informal sector called Ibile app or Ibile app or something. We're still tracking that to see how it goes, but everyone is beginning to think, how do we use technology to make a difference? There's also the interactive voice response or interactive message response. This is, for example, you know how now if you want to know your name, you can type a star something something, and then it will tell you your name. People forget, people don't carry their TIN card or their TIN record up and down, and at some point they need it to do a transaction. Being able to do this allows them, for example, to be able to call up their team or even do like a recharge or something, and then be able to also do some payments. So this is where you say like you type *334, it then give you a feedback and say one, request for your team. Two, check how much you paid last or something like that, right? So that allows those kind of interactive conversation. The AI chatbot, again, I talked about we have limited resources. You don't want to stretch your staff thin. Most of you have frequently asked questions. You can use that to train AI chatbots that can respond to inquiries that taxpayers might have. Today, if you go to GTC Bank website, or if you go to any real mid-level to medium level upward, they all have chatbots integrated, and it's not rocket science. It is all driven by machine learning and leveraging scripts that you write. You already do frequently asked questions, so you're already have some of the rudimentary or foundational materials to support that process. The other thing is such AI is able to go into your system to pull qualified data that you permit to be able to respond to a person. I talked about assessment calculator, and I give an example of the PIT calculator. But my point for this one is at least don't just have for PIT, have for all your core taxes. If someone doesn't, they don't remember now, there's a bit of confusion, I would say, in terms of as simple as we the policy people, when we make certain rules or when we make certain policies or support certain regulations, the way you understand it might not be the way the person receive it might understand it. So the last deduction at source withholding tax regulation, personally, because we withdraw in my organization under my program for consultants that work with us. And you see people say, oh, you now have like non-resident and resident individual and non-resident and resident corporate. And then you have this thing about consultancy, and they are saying that any other that doesn't fit into this. And you see people trying to run into the other, right? So it still remains a bit of so having a system that allows to ask some questions by way of a form input and then helps them to calculate, for example, this is your withholding tax, could really, really, really save a lot of time in trying to resensitize people because the tools are there to automatically help them work through. So, like CGT, like withholding tax, like even some of your property tax and all, you can create a similar model that you have for this PIT that you saw on this through the fiscal reform website. You can explore that. E-payment and receipting, this is something you're already doing. So I won't speak much about that. The only thing is, again, you need to make a decision on whether you're outsourcing or you're doing it yourself. And these are where I talk about the cost, the canon of economy. If the cost of you getting POSs and having your staff to go to motor parks to go and collect the daily ticketing fee is more expensive than outsourcing to, for example, working with OPay, right? And OPay is able to, because they have agents everywhere, right? And they're able to help you collect that thing is more efficient. If I mean, then you should be exploring that instead. So it's not just about the technology, but it's about the cost efficiency and the potential it will bring. So you have to check both together because some can be expensive, but the potential it will bring will be a lot. So it's not a straightforward decision. You have to weigh your options. Risk profile and data analytics is to support revenue intelligence. Everything I've said from beginning, from having a strong registration system, having a robust single custom secure customer account, integrating with other databases. I would say a story of when I mean I know things have changed a bit in the oil sector, but well, PPPRA still used to give equalization benefit payments. There was a there was an executive chairman that about this was about 4 years ago or 5 years ago that worked with that we worked with, and talking about offshoot of this and collaboration, and was able to find out that even though a taxpayer was claiming a small filling station, getting information through DPR and the rest, they were able to find out that this person actually owns, and working with CSR, I was able to find out this person actually owns licenses and owns almost 6 filling stations in that state. And not only that, to further prove that ownership and the active operation of that entity, this person has also been linked to collecting or applying for PPRA equalization payments and getting it. When it comes to data, nobody can argue if the data is factual. But technology is an enabler to getting there. Thank you. Next slide is just to now talk about that the quality of data and revenue intelligence remains a strong enabler for revenue growth. I talked about technology. Now it's about the data. And I talked about how it's not just having people in your database. How are they structured? Are they structured in a way that eventually, because if you've not structured them well, you cannot analyze by structure. You have to structure first, then you can analyze by structure. Have you structured properly? Is your the structure you have applied in terms of taxpayer segment, in terms of tax types, in terms of sectors or subsectors, are they fit for purpose for Ekiti State. Because if they are not, then it will impact the quality of data analysis you can do eventually. The other one is identifying the kind of data points that you can leverage through the single secure customer account. For example, what are kind of data information calls and queries you can pull. So if you've had me operating on your secure customer account for 2 years, I've been filing returns, I've been going to that platform to do withholding tax or some of all of these things, you may be able to pull you should be able to put my information to query and say what is the total, you know how you go on databases and you can filter. See what I mean by information calls as filter. You can pull out information and say what is the average payment by this, by name or by sector, so by individual taxpayer or by sector or by area, geolocation, or by that. And it allows you to analyze, because imagine that are constantly maybe used to get 10 billion or let's say 1 billion from a local government A, and in the last 2 3 years is dwindling drastically. You will miss that if you are not analyzing by geolocation, because then you do not know where to, because it could be an issue of maybe people are moving, it could be an issue of rural urban migration. It could even be an issue of urban migration, living, like people moving from Ikoyi now to Epe because of cost of living, right? But without you analyzing, you will miss those details that can help you adjust and make sure that you do not lose the revenues that you are getting from those initial points. So you see how it flows from structuring properly to actually now using the data points that and information you get from those structures to then inform your compliance strategy. The other one I must say is the exchange of information framework and protocols, because they say where there's no law or rule, there's chaos. And even within state, exchange of information is a problem, where you're expecting information from agric, but agric is not giving you, your property is not giving you. When they give you, they just give you one flash drive. You don't even understand what is inside. That is why you need a framework or some kind of protocol. I'm trying to get executive backing for such protocols that requires and states out, okay, you will have pre-identified, these are the information sources or data that we need. These are the people that are holding it. These are the ones, these are how this information relate to this taxpayer segment or core tax. This is justification for how they are useful to this, and this is the format in which we need it. This is the periodicity in which we will need it, and this is the way we need it to be reported to us. And it should be exchange information on automatic. So define which ones can be automatic, which ones will be on request. And with that document, you can easily more engage with any agency within, at least starting with Ekiti, within Ekiti, that you need information with less pushback. During SIFTAs, for those who are probably familiar with the World Bank program before the current one, SABA, there was a lot of money spent on property mapping, urban area, and the criteria was I released places with 50 with electricity connection, and a lot of data was gotten. But I speak boldly that speaking with a lot of IRSs, that data was not used by the IRSs, on even some chairmen, again, no fault of theirs, because of outgoing and incoming, did not lost sight of that data. There was actually a chairman I read out. I got the Federal Ministry of Finance to give them the data. Eventually, they could not use the data. And that one was not even an issue of that the data was not useful. It was because the format in which the data was given is not meeting the skill and capacity of the IRS to use it. So, and I'll get to that where I'm going to talk about that. Your research unit is not about just having economists. You need to have data scientists. No, you need to have at the back of your mind, what are your core taxing? How do they relate? What expertise will be required to use those kind of data? If you just have data scientists, and you're dealing with complex issues like, for example, property tax, for example, and INWI that is doing a lot around the tax planning, you may need For example, someone with a strong finance accounting background, and you may need someone with a GIS background. So your research unit should not be driven just by one discipline. So this is another thing you need to have at the back of your mind and should be driven by the scope of your data taxonomy or your tax segmentation. So exchange of information is very much connected to the capacity and staffing and structuring of the unit that drives that, because exchange of information can link back to your research and data unit. The other thing I want to talk about is whistleblowing e-channels to support tax assessment. People don't trust the government. Simple. It's not about whether the government is doing right or doing wrong. Trust deficit has increased over time, and a lot of effort is being made now to repair a lot of this. And we're talking about decades, right? So it's making compliance very difficult. Yes, you don't. The ones that come automatic, we know payee, they will draw it from employer, draw it from the employees. But when you get to DA, you begin to see the difficulty, direct assessment. When you get to withholding tax, voluntary this thing, aside for the ones you are taking from contract, you begin to see the difficulty. And that is where trust becomes important. Now, the question is, how are you doing? Are you doing, for example, perception surveys? When last did you do a perception survey? Have you been able to identify it? It's not just about calling stakeholders. You don't need to every time call stakeholders for consultative meetings. That's not the only way to get that information. Perception survey, um, perception survey, and you can do also behavioral studies as well. Behavioral studies is also another way, and what this is just checking for you is how you adjust your approach. The way you approach an INWI is not the way you approach the way you approach someone in construction industry is not the way you also approach somebody in manufacturing. There's a level of understanding of the sector that people you are pushing to those sectors to go, they must also know. And I'm not saying they have to have been in manufacturing before, but they need to understand that to be able to harness data, utilize it, they need to understand those sectors. So back to my this thing about whistleblowing, doing that through e-channels allows anonymous whistleblowing. Anonymous whistleblowing, meaning anonymous whistleblowing that people can actually suggest information and all of that. You never can tell what you can get from that. But this could help in things like income reconstruction to ensure that your BOJA, for example, your best judgment assessment, is more evidence-based. Because what income reconstruction relies on is your ability to be able to factually, to a large extent, rebuild or situate where this taxpayer who is refusing to comply, or you're able to, or is not able to provide, you're able to assess really where this person is. Because the moment you issue a budget that is completely off, and I know it's off, I already know that the IRS doesn't know what they are doing. And so I'll just push you around. So it's even better that you are silent and you don't go and give them the wrong thing. That when you give them the wrong thing, that shows that you lack data, you lack understanding. So it's very important. Data analytics, predictive modeling. I talked about, I mean, there are things like forecasting, bunching analysis is used for when you want to check, like I said, behavioral reaction. So, for example, CGT, when the whole CGT thing for stock market happened, it was because somebody was tracking, right? And there's data there to show that there was a sudden dip of how much was sold out, was what made the government react. If nobody was monitoring that data, you cannot take action. So if you assume all is well and you're not tracking perception, not tracking trends, then it becomes difficult, right? So it's very important. And when we're doing a lot of the work, because I'm also a member of the Presidential Fiscal Policy and Tax Reform Committee, there was a lot of predictive modeling that was done. When, for example, the VAT formula was being decided, when the PIT, a lot of that, even as presumptive tax is being discussed right now, a lot of these things are going into consideration. So you must always look at all of this. And I will still come to the next slide about what some of the kind of analytics I think you should focus on in the immediate term, like immediately. The last one, okay, I've talked about deficit and building trust. So data is the new gold. However, it's a diamond in the rough. If you do not refine it, process it, you cannot get revenue intelligence out of it. It will remain as data. You need to be able to convert that data to actionable revenue intelligence. I gave an example of the one about the filling station, tracking all the way to equalization fund payment and things like that. See how much of data points was required or was explored to make that to be able to carry out that operation. There's also an interesting story, and Chama, you can also talk with Lagos. I believe there was about also about 4 years ago or 3 years ago when Lagos on an exchange visit, we took a number of state IRSs there. I actually believe I think Ekiti was part of the state that visited Lagos at the time. And they had this thing they did where they had a unit or say sub unit that goes on revenue intelligence. So they go to plazas, for example, act like they're buying things. They go to weddings or so would I say event centers, right? And they observe because if you are telling me as an event center owner, oh, you've not made any sales, you've not done anything in the last 3 years, but I have evidence to show that for the last 3 months, back to back, Friday, Saturday, there were events holding your event, or then you have explanation to make. This is where we need to put our field officers to work, our area officers to work. Analysis is not just done in the office. Revenue intelligence has gone beyond just desk work or desk analysis. We need to actually go out there and get that information. They also had people that will go to plazas, assess all of this. So it was very intentional. We need to be intentional about how we gather our intelligence. What are some of the immediate data analysis I think you should take into consideration? One is the impact of the new tax law on your core taxes, PIT, and the proposed harmonization of the list of taxes. Mr. Tolu spoke to some of those. However, if you look at the table he presented, the rates for those things are not put there because some of them have to be legislated by the states. And I remember I said when you are legislating those rates, remember that your neighboring state is also legislating. You want to be competitive. I want to ensure that the rates you are picking or you are putting are things that are representative of the affordability of the economy of Ekiti. Otherwise, remember our Laffer curve, you begin to lose and your compliance will dwindle. So affordability analysis as you domesticate things like the new presumptive tax regulation and even the harmonized taxes and levies. I'll have that when I revise this presentation. Is very important. I've talked about environmental scanning for sectoral trends. Construction is booming. Track that. A lot of them are using direct labor, which is fine, but you are not chasing. I mean, because those people will probably be under the income tax table. But there are some, I mean, operators within the construction industry that engage. This is the time that are now they will subcontract and things like that. You need to keep an eye out there. Look at the economic activities that are booming within Ekiti, and that should drive some of your strategic focus. Some of your strategic focus. Now, it's very important that I talk about charging debts by age and nature. I mean, it's good, yeah, we distrain, we do all of this, but you are getting lawyers, you are going to court, you are spending money. You need to charge your debt enforcement by age and nature. If a debt is, for example, has been going on for almost 10 years, and the revenue that is going to be yielded from that is not economical, it's pretty much maybe, let's say, for example, 20 million. You need to look at how much is the cost you are spending on your legal services, right? To pursue such a debt. You need to make strategic decisions. So, but data is what will drive that. Everything I'm saying, data is what will drive it. And even when we do our analysis, we always think, oh, it's just about financial data. It's just about, I've talked about perception studies and how they can have an impact. I've talked about behavioral studies. I've talked about in a number of other things. So the other one is evidence-based income reconstruction. I think I talked about this before, but our leveraging now some of the provisions of Section 29 of the Nigerian Tax Administration Act, talking about your powers to I mean, for the requirement for stockbroker, insurance company, all of them to remit to make disclosures to all relevant authorities. Disclosures to all relevant authorities. So that already gives you some ammunition, some leverage that can use to begin to pursue some of those data points. And UI arrangements, like I said. Um, I said I was going to talk about some enabling provisions in the new tax act. For the JTB one, I didn't put that here, but the simple thing to say is that the JTB will manage some kind of manage a central database for the team and will also will be a central figure in facilitating the data exchange process between IRSs. Um, and I'm sure maybe some of you might have heard about the Data for Tax Initiative, which is something that the Joint Tax Board is working on. And I'm sure as things evolve and take shape, this will be shared with the states. But the idea is warehousing information from everywhere so that you also don't stress to be going bilaterally to go and be chasing NIMSI, to go and be chasing NMPC, to go and be chasing. Some of this data can be aggregated and then based on defined access protocols, so someone with a clearance in your IRS can view. Some might be view only, some might be view and access and things like that. So that initiative is being thought out. It's been thought out. There's also the Nigerian Single Window Portal, which again is going to bring a lot of all those this thing. But there might be information in there that I may be able to also access. The other thing is NIMSI by the new GRB Act now is now an ex-official member. They've been added an ex-official member. Again, I believe that would help the relationship and smoothing relationship better because I know that a number of IRSs have been having issues about accessing NIMSI data and all of this. But some of the sections I want to talk to section 5. So all of section I'm going to talk about now under the Nigerian Tax Administration Act 2025. The first one is that every MDA of federal or state government or whatever of every LG shall register for tax and obtain the tax ID. So it's not a begging thing. It is clearly written that it extends to them. So you have that there. Section 7, subsection 3 also says that you have the authority. If someone is refusing to register for tax ID, and you have evidence that this person is a taxable person, qualifies as a taxable person, you have the authority to issue a tax ID to that person and inform that person that you have issued them a tax ID. Um, Tin is also clearly written in section 8, subsection C, as a condition for entering into contract with any federal or state ministry, department, agency, and local government. You need to follow on some of this provision and be able to tie it back to your data intelligence, right? Because if you have state ministries that are still do, that by 2026 are still issuing contracts, are not enforcing the requirement for TIN, then you should use this law and these sections to mandate that. Section 9, subsection 1 requires that every taxable person, so this one transfers the burden of updating information from the tax authority to the to the taxpayer. The taxpayer has 30 days. Should any change happen in their particulars, the taxpayer must notify the relevant tax authority of the change. This is how it's done everywhere in the world, Canada, US, Britain. That is how it's done. If you change address, you must go, you have to inform the authorities because if they find out, they'll put on you an administrative penalty. Section 10, the taxpayer must also inform the tax authority of temporary or permanent cessation of trade or business, right? Or trade or business. This will probably be more under the purview of the NRS than the state, but there might be some leverage to use this as well at state level. Section 48 recognizes clearly the exchange of information between tax authorities in pursuing compliance. It also recognizes that, look, if Ogun is doing something and observes non-compliance, if they are doing an audit and observe non-compliance in a taxpayer that relates to Ekiti, they should inform Ekiti of such non-compliance and invite Ekiti to join the audit. And these are conversations that may be needed to pursue with JRB on the floor of JRB so that we give action to a lot of these provisions. They have been put there, they are good provisions, but it will require will, intention, and action to really use it to get to where we want to go. Section 25 provides returns for virtual asset service providers, requiring them. When I say virtual asset providers, this is going to the digital. We've been talking about digital, and Chama, I don't know if you attended, there was a digital virtual learning session of this some time back about the potential in the digital industry. And this is giving teeth to that it's not just banks and stockbrokers and insurance companies that should disclose. It has now defined that the kind of mandatory disclosures that those people must from cryptocurrency platform, all of those people. I mean, and this is flowing from the lessons from the Binance and all of them. If you see the fifth schedule of the NAA gives you the details of the mandatory disclosures. And if you look at those details, you will see that it provides you enough data intelligence to be able to use it, right, to actually action a compliance strategy and enforcement. And not only has the law done that, it has also introduced for this, for example, in section 109, administrative penalty for non-compliance, going into, if I'm not mistaken, about 1 million plus the first day and something like that. I mean, if you check the section, you see the exact penalties there. Section 29 does the same, saying that information must be delivered by banks, insurance companies, stockbrokers, other financial institutions with or without demand. So again, it's pushing the burden of disclosure. The Ekiti IRS doesn't need to ask you that. They're asking you, they're even doing you a favor. Right. Of new customers, existing customers, in the case that individual transactions are or where cumulative transaction is an amount of 25 million or more, or a body corporate where all transactions, cumulative transaction is more than 100 million or more. Section 57 and section 58. Now, what does this do? And this goes back to technology. It's saying that the law now recognizes that when you are saying you are checking tax book and tax record of a taxpayer, it does not limit to hard copy. It extends to information residing on electronic devices, cloud, and computer. Right? So helping you manage things like, oh, you do not have a legal mandate or a right to do this. This is trying to help you. These provisions are putting to rest a number of issues. Section 41, giving you leverage and a wider use case for technology. Section 41 and Section 83 recognize electronic means as part of the channels for serving notice of assessment and revision or in the case of an objection. Remember I talked about secure customer account. So people might say, oh, the wording is that you must write a written objection in the previous law, right? This recognizes that yes, the written can be written hard copy and can be written e-copy. So this is making it clear that electronic channels are recognized by the law in tax administration. Then section 71, which is the final one I'll speak to here, just recognize that it says that a relevant tax authority may deploy technology to automate tax administration processes, including tax assessment, collection, accounting, information gathering. Goes further to then say a relevant tax authority may deploy any technology, including third-party payment processing platform or computer application to collect or remit taxes due on supply of digital services to any persons, whether or not such supply originates within Nigeria or outside of Nigeria, obviously excluding corporate cross-border transaction and non-resident, which falls under the NRS. So these are some very important provisions that I think are useful to the conversation, and you should pay attention to. I've just taken the liberty to also put some resources I think will be useful for you to explore as you take things forward. One is the 2025 NGF IRA report, which just kind of gives some picture of your digital readiness. But however, that report has also been further updated by a bilateral conversation we had with you, Chairman, and your team, where we also compared further notes and some more refined recommendations were made in that meeting, which I know for a fact that you're already working on in implementing. Another resource I've put here, especially as you deal with ICT, your ICT vendor, because for example, in NGF, we're not in the business of telling you, oh, go and stay with Microsoft, go and stay with IBM. We don't get into that. What we give you is resources, advisory that will guide you in that conversation so you do not lose your way. This is a resource I've hyperlinked here. It's from the IMF. It gives you some idea around the high level functional or business requirements that you should be considering as you develop your IT system for your core taxes, functions, and some of those. For those who are interested, again, in analysis, there's a course on the NGF e-learning management system on best of judgment assessment that goes into things like income reconstruction, how to go about it, and some of those. And it's free. So if you're interested and you have not taken the course, please visit there and you can take that course. Right now, it's based on the current, I mean, as you know, a lot of the Nigerian Tax Administration Act is coming into effect in January. So the cost currently reflects the existing laws before this new one, but it does not really impact the process that is explained in that course. So it's very much still relevant to your process of using revenue intelligence and converting that to action compliance actions and a lot of those. Another course I was able to find because I understand knowledge is important, and also the good thing about internet and technology today is that there's now a lot of resources out there, a lot of them for free. I went to the IMF website for a course on the revenue forecasting analysis. Again, when you do some of these courses, like this IMF one, it might talk about national or sovereign jurisdiction. However, what is important is the mechanism you are getting there, the methodology, and you can then see how you can apply it in your subnational context. Because, for example, calculating annual growth is calculating annual growth. It does not matter whether it's South Africa or it is a Mauritius. So knowing the methodology is really what is important. So I've put a link there. Interestingly, I've also gone through that link and I see that when you pick Nigeria as your country, it actually recognizes state government. So you cannot pick your state government as an option. Okay, it will tell you to register on the IMF portal and you can take this course. It will give you some access to send to your email the access codes for you to then take the course on what is called edX. But you have to go through this link to get there. So I've also put that there. I've also put edX and Coursera learning platform themselves, the links here for those who might not know them. You can also find a lot of useful courses there, a lot of them free. And then if you now want to collect something beyond the certificate of participation, you want to collect some kind of professional certification that is in conjunction with a university or something, that you will pay. But I think right now, what I'm encouraging is getting the knowledge you need. Chairman, I don't know when last this was done, but another starting point could be even as simple as basic Excel skills in terms of being able to use critical analytical analysis rather, things like I said annual growth, things like trends, things like regression, simple as simple regression and simple multiple regression. They help you to do things like correlation. I've been able to use that to to inform forecast and things like that. So these are things that I think would be useful, and I trust that under the administration of the executive chairman, we would have a better Ekiti State Internal Revenue Service. Thank you very much, and I'm happy to take questions.
Yes. I'm on mute now. Hello?
Hello?
Can you please hear us?
Sorry? I can hear you now. I can hear you.
All right, thanks. Thank you so much. We're very grateful for that beautiful presentation. I have only one question asked by colleague. I'll paste it in the chat room for you also to to see it, and then I will also read it for the answer.
No problem, sir.
Since in the course of your presentation, you mentioned that quality data will give room for revenue growth. My question is, what can we do to have a robust and quality data that will be helpful in our job as tax administrators? So that's the only question. Is there another one?
Okay.
I think we should just take that one.
Okay. So for that one, sir, so I would say, like you said, right? You can have and I'll use an analogy of a car. Someone who drives, you can have two cars, a V4, right? A four cylinder and a 12 cylinder. People who don't know the difference will still drive a 12 cylinder like a four cylinder, right? Now, having quality data is a starting point. And I gave an example of the filling station one and all of that. That data was there. But knowing how to use it and then knowing, confronting that, because in that particular case I mentioned, when they confronted when they had the audit meeting with the person, it was a different conversation because it was obvious that the tax authority had information to nail him or her, right? And it was a different conversation. So, what getting to is that, especially in this era where Boja is becoming prevalent, right? Especially in prevalent, is that we need improving the quality of our Boja such that it will nudge easier compliance. Because when I know that, for example, if someone should call you now, so I calls you your full name, your first name, middle name, and last name, I think you are going to react differently. Or imagine the person calls you your nickname when you were in secondary school. You will probably react differently because it means this person must really know you and know you very well. If we transfer that same ideology to this conversation, that is what that does. Is being able to use that to inform things like best of judgment assessment, inform things like how we approach. So, for example, when you are deciding the tax rates, right, for certain collections, right, you are able to do things that will be acceptable or will be more acceptable to the taxpayers that will be paying that, right? So those are, see the outcry that happened initially when people didn't quite understand what the thresholds for PIT was, or is it the one about the one on CIT? I don't know if you recall. There was a struggle between is what is small company and what is small business, because the initial version that was flying around had two different definitions, right? So this is how intelligence, and when I say intelligence, I don't always want us to think of intelligence as just financial data. Intelligence can be behavioral insights, perception insight that will inform how I relate with this person. So these are some of the important things that, and we do some of these things unconsciously, even for the politically exposed taxpayers. The way you approach them is pretty much different from the other high net worth or corporate or other individuals you approach. I hope that helps, Chairman. But it's feeding back to things like your Boja and how you react in terms of your compliance strategy. Once you do that, then it will yield better result because the person will not be able to argue with you as and snowball you in terms of an amount that will pay. If you come to me and already tell me 10 million, and I know that ideally I should pay 70, I should pay 2 billion. I'm going to pay the 10 million because I know that you don't know anything else. You don't have data on me, and you'll have lost that revenue. So those are the kind of things that this will help you to correct and adjust. Thank you.
Thank you so much. I'll give room to our guests. Maybe anybody has any comments. Isi Oshun, Isi Ondo, a brother from Kaduna. Do you have any comments? Good afternoon, Larry.
Good afternoon, sir.
My only thank you for this.
I lost you. I can hear you now, sir.
Okay, thank you for this presentation. It's been wonderful, and I see it's actually an upgrade of the version we had in Abuja. sometimes ago at counting. And my challenge with you is that you are too busy to respond to chat and calls and whatnot. This is EC or show. My name is Hamzat. So we discussed on how we can leverage on some of the resources at your hand towards expanding our digital public infrastructure, but we have not been able to move ahead as expected.
Okay.
So thank you. I'll continue to reach out to you. Maybe one of these.
Yes. I would check. I'm sure if it's me, Chairman, I'm always at your beck and call. So I'll put my number again just to be sure that you have not missed a digit from my number, please. But please reach out. Reach out. We'll do our best to help and navigate these things. Thank you.
I think we have to thank you, Lanre, for taking time. We're really sorry for keeping you. Apparently, you were on the YouTube link. I was searching for
you.
From the discussion. You've been there and we didn't know. We kept on waiting and we kept on waiting. It's part of those things, but we want to really appreciate you, and of course, where we need to still definitely further engage with you. And we are very, very grateful. God bless you tremendously. With regard to all the other members of the NGF, we are very grateful for your contribution. Thank you.
Thank you, Chairman.
Okay. So we take note of.
I will share the presentation so that some of the resources at the end of the presentation that I said staff can explore in terms of training and some of those things, they will be able to use it. Yes. Yes.
God bless you. Let's give him a round of applause. Thank you so much. Also, ladies and gentlemen, I think it's been a very lengthy time that we've had together. And sorry, the launch is a bit delayed, but got to go for it now. And then when we come back, did I hear that we should forget about the launch? Okay. All right. Thank you, everyone.